Hi, I'm Bert Nussbaumer from macrobeat.co.uk. Well, the week started really with a bang on Monday, where we had a strong move lower in the equity market. We had a sell-off on risk FX, strong rally on the dollar, which is really what we talked about last Friday in our session, that this is just how things start to line up. During the week, things really fell a little bit quiet. We sort of ranging at lower levels in the euro, at lower levels in equities. It wasn't until really late yesterday when Mrs. Pelosi started to talk about a 2.4 trillion stimulus that she's prepared to talk about. We've seen a bit of a bounce in equities, and what I would say was more of a bit of pathetic rally given the news, which I think the market gets a little bit smarter, may actually start to realize that this could be a political ploy, given in 4 days' time we have the first presidential debate on September the 29th. So I guess the Democrats suddenly realize that, you know, the US public may start to think they don't do enough to actually help Americans through the crisis. So the market, I feel, reacted correctly. We actually even flagged on the day now, small down, so the market wasn't impressed at all about it. We will see next week whether, you know, that stimulus talk is getting some legs, which obviously if it does get some legs, there's probably another small rally in equities in store. But generally, I think the changes of trend that we've seen in the last few days and weeks, I think, are real. So I think still that equities will come off. I think the dollar will rally. Interesting maybe as well that yesterday we had about 8 Federal Reserve speakers. Some of them actually broke protocol. Some talked a lot more upbeat about the economy and about inflation, which is rather interesting to see after, you know, in the first part of the week, many of the speakers tried to sing from the same hymn sheet as Mr. Powell, but there seem to be a little bit different views going on inside the Fed, but that's probably not a story for today, but, you know, for the weeks, months ahead. Today, I obviously will show you the DXY just to kind of wrap up, but I want to talk a little bit about EM and explain 1 or 2 things and what is happening on the EM side. So the first slide I have for you is the DXY. We see the sort of strong rally of the last few days. Interestingly, we rallied exactly to 94.60, which is the 2020 downtrend from the March highs. We might have to do some work here, but I think this is just the start of the dollar going back up and not just a bounce off the low. So I expect this level to break in the next sort of few days or 1 or 2 weeks. Now on the next slide, this is the Turkey repo rate. And as I said, I want to talk a little bit about emerging markets. And you will see on the charts later what I mean by that. So we obviously had this 24% interest rate level in 2018, 2019, when they had to defend a weak Turkey. And then we see massive rate cuts down to this 8.25 before they actually finally pulled the trigger to hike rates 200 basis points because the currency was just under such severe pressure. On the next slide, we have the dollar Turkey. The first circle, you see the crisis in 2018, which led to the central bank having to hike rates up to 24%. And the second circle is when the Turkish central bank started to cut rates. And as you can see, the Turkish lira continued to devalue. Obviously, there's some other macro reason involved as well, political nature and so on and so forth. But what I think is happening in EM now is the strong rate cuts that we have seen out there. We just start to have not enough risk premium. So interest rates are too low for the market to actually start wanting to buy Turkey again. And that's why we've seen one of these emergency hikes yesterday to stabilize things. On the next slide, we have dollar rand. If you look where dollar rand is coming from the start of 2020 versus where it is now, it's the same problem. Interest rates are now down to 3.5%. So it's really hard to see the market getting really interested to buy rand in the current environment of COVID and all the rest of it. So I think EM continues to underperform because there is not enough risk premium. Even in a zero rate environment, 3.5% is not paying enough for rand risk. And so I don't think rand can recover. Last slide is the gold. We did break the levels. We held around 1866. So I think gold is still at risk for a move lower. Thanks very much indeed. Bye-bye.